Welcome to the Scale Up Valley podcast, where we bring the best founders, investors, and CEOs to help you scale your business from 1 million to 1 trillion. Today's guest is a very special one. His name is Chris Walker, the chairman of Refine Labs and CEO of Pesetto. Chris, welcome to the show.
Mike, pumped to be here. Thanks for inviting me on. Looking forward to getting into it today.
Awesome. And Chris, for the ones who didn't have the chance yet to get in touch with your amazing content in B2B, and I'm sure that this will be almost impossible, but just a quick overview about yourself and just to kick us off.
Yeah. Hey, everyone. My name's Chris Walker. I've worked in B2B companies for my entire career since I got out of college in 2012. First as a consultant inside of a holdings company that did supply chain operations, product development, product management, and then got further into, as I saw the patterns in those companies where the market was going in one way, they weren't connected with their customers, their go-to-market was falling behind, where it was very reliant on like a field sales motion or things like that. And so in 2016, I started to bet my career on marketing, leveraging a lot of the core principles that I learned from the other parts of the business, like the financial modeling and cost of goods sold and gross margin, and thinking when you think about marketing from that lens, you end up with an entirely different strategy about how you deploy your investments, how much money you spend, how many people you hire, how you blend internal and external talent. And so I just learned a lot in that. And then in 2019, I started my first company, Refine Labs. We built, I think to this day, according to like the LinkedIn agency data, the fastest growing agency in history, according to LinkedIn. Over that time, what the market really needed was we need to figure out a new strategy for marketing that doesn't involve high volume lead generation. But at the same time, companies had zero interest rates, massive valuations, tons of funding, not a lot of pressure on CAC or efficiency. And the solution was just, let's spend more money, let's hire more SDRs. It doesn't matter how inefficient this is, let's just more. And in 2022, we started to see a change in that where the market has entirely shifted in how companies are valued, the interest rates, how an investor would value a company. A lot of companies facing a situation where they have to extend runway or risk a serious down round. And the landscape has changed completely. And so as we've seen that, basically, I saw that market problem quite early. I've spent a lot of time studying it, and I've launched my new company in January, Pesetto, which is focused on helping B2B companies create a data structure and data layer that looks at the entire go-to-market so that executives can make what should be fast, easy decisions about how to deploy millions or tens of millions of dollars in investment every year in a way that makes sense and drives positive ROI. And so that's the new venture that I'm working on today. I feel like I'm one of the most connected to the actual issues that B2B companies are facing today and B2B executives face because of my deep level of consulting and the broad view I having worked with more than 500 companies in the past 5 years. And so I just feel like my perspective on the market is very unique and very real to what's happening on the ground.
Yeah. Congrats and thank you, Chris, for letting us, the audience, know more about yourself, and congrats for what you did with Refine Labs. So we also have an agency more on the advisory and consulting side, and we know how hard it is to scale up a services company. So kudos to you for that, and also love the way you are thinking about the vision for the ecosystem that you are creating, right? So you also have on your LinkedIn, I'm building an ecosystem of complementary, highly specialized B2B go-to-market technology and managed services, right? And you start with Refine Labs, you have Pesetto, you also have on the banner of your LinkedIn. Could you share a little bit more about your vision for the long term with this ecosystem of B2B go-to-market solutions for this segment?
So there is a massive divergence occurring inside of B2B go-to-market today. The companies that continue to rely on models like the demand waterfall that was originally created in 2004 and to still use the same standard setup inside of their CRM where they have data spread across campaign members, campaigns, contacts, leads, opportunities, accounts. They have all these technology tools pushing data in with no architecture. And all of a sudden, the executives want to look at the data and they have no real data to make decisions. That whole thing was predicated on the idea of growth at all costs. And
Right.
then there is a shift happening in the market where companies need to build a profitable, efficient growth and go to market engine. And with that, we need new models. We need new data architecture. We need new KPIs. We need new ways to align cross functional teams. And so I think there's a new path going. And in order to achieve that path, you need data, you need analytics, you need executional firms that can actually go in and make the changes. And so the goal is to build a portfolio of complementary specialized companies that handle different things from go-to-market operations, go-to-market strategy, analytics, advertising, content creation, website design, AI automated outbound, and a bunch of other potential things in the future to basically build all of the things that you would need to be able to execute a go-to-market in this new era. And so that is the overall objective about what I'm working on.
Absolutely. Something very interesting about your path, Chris, is that you have been kind of started as an engineer, so you evolved into product manager to director of marketing, then also CEO of Refine Labs, and now more of a chairman and the CEO of Pesetto again. So I, I would love to talk to you, and I think that this will, we hope this will happen to some of us that maybe have been kind of starting product companies, and it gets to a moment, or services companies, and gets to a moment that they want to delegate the leadership of the company to a new CEO and start another company, or just stay as the chairman. In your case, you decided to start another company and stay as the chairman. How has been this transition for you, and what would be the advice that you would share with others that might be through the same stage that you faced some months ago?
Yeah, I think partially it depends on the financial structure and the cap table. So at Refine Labs, our cap table is incredibly simple. There are two shareholders. I remain the majority shareholder. It's very simple for me to remain the executive chairman as the majority shareholder. Now, if you have three co-founders and you've raised 4 rounds and you're fully diluted and
Right.
no one has majority share anymore, it's an entirely different story about how you progress. I believe that over the course of the past 5 years as an entrepreneur, I've been able to identify what are the things that I'm really good at, where are the things where I have a superpower that is very difficult to replicate, where are my weaknesses, what are the things that I do not enjoy as a leader, it doesn't give me energy to do those things every day. And I have basically come to the conclusion that I love the long-term strategy aspect of a business, being able to look over 3 to 5 years and paint a picture about what this could look like based on pure market data. And so that's something that I'm really strong at. And you don't need to be the CEO or an operator in order to get there. And I'm incredibly good at the 0 to 1, or I would even look at it as 0 to 10 phase, which is basically
Right.
identify a market problem, build a differentiated solution, create a message that resonates with the market, get the market to rally around that message, achieve product market fit, deliver a service that delivers tangible value that customers want to talk about and tell other people. And that aspect, I'm incredibly good at listening to the market, having a feedback loop, making decisions. And so to be able to try and put yourself in the position to play in those two areas for me, and to try to not play in the have 8 meetings a day, sit in a 3 hour executive team meeting every single Monday and go through the things, fight fires with customers, deal with politics and culture that come with a large organization. Those are things that just frankly, I don't like to do. It's not me. And I think that uh, 5 or 7 years ago, I thought that was me. And I thought and then through the experience of actually doing it, you figure out some things, hey, I thought I wanted that and I actually did. And other things, hey, I thought I wanted that and I did it and I don't. And I think being able to be uh, honest with yourself, specifically around what makes you happy, what gives you energy, what do you like to do on a day to day basis at this point, like, I mean, I love to work, but I don't need to get up and go to work every day. I do it because it's something that I really enjoy. And so
Got it.
that was the overall rationale of how I got to the decision. And then having a business partner or somebody that can go in and be a successor and actually take that existing business that has a ton of enterprise value and happy customers and a great brand in the market someone that can take that and make it continuously better, grow, other things, increase enterprise value and things like that, which I had in my business partner, Megan Bowen, who's been my business partner in Refine Labs since 2020. And so that situation made it another core rationale as to why. And Megan's going to be a great leader and has a great plan for that company. And then other times there's just core shifts in the market that open up new opportunities. And that is what has happened. And sometimes they line up perfectly for you. And I think that my background in like the financial modeling, profitable, publicly traded companies that don't raise money from VC,
Right.
all of the customer insights, and then all the CRM data that I spent the past 5 years in, and all the things sort of just aligned where it's like, hey, there's an opportunity here to build a profitable, efficient architecture.
We will get back to the pod in 1 minute. Let me just tell you that I'm glad to announce that this podcast is sponsored by the web agency WebTech. WebTech are specialists on getting customers to companies. They are booking 250 meetings a month to their own sales team. And their business strategy is to teach other companies what they do for themselves. I'm very excited to announce that I've agreed with Pontus, the CEO of WebTech, a special advantage to our listeners. Our community have now access to a pre-designed suggestion on how your website could be improved and or free trials for both SEO and digital marketing. Oh, and by the way, we are working with them too, and I'm impressed by the results. You can do the same. You just need to go to trywebtech.com/Mike, trywebtech.com/Mike, and tech is without the H, just TEC, and tell them you are a listener of the show. Now, back to the pod.
So something that you started with talking a lot about demand gen. So you even said in some of the podcasts that I heard that in the initial episodes, you even shared very technical advice in terms of how to write the content, how to write a successful LinkedIn post, and some of that stuff. And then you evolved it into, nowadays we are in the go-to-market era, right? So where we discuss about the importance of having marketing, sales, customer success, and product aligned on the same page. And something that I really enjoyed to see recently is that you are also trying to make the CMO or the CRO or the go-to-market function to talk in the same language of the CFO. So really being fluent in metrics. So how has been this evolution for you, kind of going from demand gen, going from a very marketing specific background to kind of be the go-to-market guy, and also being able to have a presence in the C-suite? And I know this is a very open and big question, but yeah.
I mean, I think that part of your message to the market has to match the timing of the market. And so the story around profitable, efficient growth and lowering cost of acquisition and stuff like that, I was telling that story in 2019 and 2020, and nobody cared. It did not resonate with the market at that time because it wasn't real in the market. And so in order to create a message that matches with the market, it was really about changing your advertising strategy and changing how you attract customers, with the core goal of creating a much better marketing ROI, having much more efficiency in your sales team and your sales development team, having more reps hitting quota, building a better model around how you grow sales headcount and you scale. But people only saw the message around let's figure out how to spend $1 million in advertising back then, because that was what was real to the market. And so I just want to, I like to reiterate that the strategy around my demand gen message has always been to improve go-to-market efficiency, to create more pipeline at a lower cost with better sales velocity and better sales win rates and better SDR productivity. That has always been the message. And now it's just where at this point, the market is ready to receive that message because of the pressure in the financial system. And so it's really just a tweak on the hierarchy of the message, where demand gen is now in the third tier as one thing, but you also have SDRs, you also have sales headcount, you also have go-to-market operations, you also have technology. Demand gen just becomes one piece of that puzzle to a bigger message, which is we need to deliver a growth rate at an appropriate CAC payback period. And so it's just a shift in the hierarchy of the message. But to be clear, the message is consistent that I've been saying for more than 5 years.
Sounds great. Awesome. And something that we discuss a lot in scaling up is, and this is also related with the unified go-to-market strategy. It's about the importance of not only acquiring customers at a reasonable pricing, but also being able to expand the customer base. And sometimes to expand the customer base, it is also possible to, to market to the customer base and to launch new products, et cetera, et cetera. So what are your insights about, not only acquiring new customers in a cost efficient way or with profitable growth, but also expanding the customer base?
I think that the quotes that people say around like it's way less expensive to retain an existing customer versus acquire a new customer are in theory correct. But this isn't an either or game. We need to be able to deliver a great product that customers love, that they get value from, that they see a future, that they expand and renew. And we need to attract new customers and acquire new customers at an appropriate cost that hits our, return on marketing and sales spend. So it's actually like, I don't like playing the either or game and go to market. It's a both thing. And if one thing is underperforming, then it makes the other thing have to be, a super high performer or vice versa. And you need to look at your entire go to market and make your own decision based on the business. Sure. Is it better to have 105% NRR than 98%? Of course it is. But if 98% is your reality, then you need to acquire, 7% more net new customers to make up for that gap to achieve your growth rate. I think it's more about deploying the right amount of investment across these different things to create the most leverage or the biggest growth path. Another thing I like to say is that NRR, GRR is not a metric where you like create a sales training or an account management program and all of a sudden that metric gets better. That is a long-term metric that takes a long time to change. It requires product enhancements. It requires process. It requires you filtering out a bad set of cohort of customers you acquired 3 years ago and having customers that have been acquired earlier with better qualification criteria to come through. And so while there are always things that you can do to try to improve that process or move that metric, it really takes a long time to make tangible, meaningful moves on it usually. And meanwhile, at the same time, companies are just spending way, way too much money between creating pipeline and closing new logos. Between those two buckets, way, way too much money based on what they're getting in terms of the actual outcomes. And that's the number one place that you need to correct from a financial standpoint. Companies typically don't overspend on customer success and account management. They overspend on sales headcount, SDR headcount, and marketing programs and headcount. And so just when you think about the time to impact, if you're thinking about the financial metrics, that is the slice of the pie that creates the biggest opportunity in B2B companies today by far. And it first involves going through and looking at your top level metrics, methodically breaking it down to identify what is the actual issue. I'll give you the fast track. In most companies, the actual issue is unit economics, that the amount of money they spend to create pipeline, they do not get enough pipeline back. And the amount of money they spend to close pipeline, they do not get enough in close one revenue, leading to a low PRP or, rep productivity. And those two issues can really only be solved in the short term by adjusting the cost structure to match the reality of the performance. And you don't have to just do that in one fell swoop. There's a lot of data that you can use. There's a way that you can use as a process to mitigate business risk. But if you're way underwater, you can try to double the performance of your marketing dollars and your SDR dollars at the same cost and your sales team, or you can try to reduce the cost. And it's just unlikely that you're going to get 100%, increase in performance in a short period of time in the current situation.
Right. And you are right. So customer retention is really critical to have the fundamentals in place to be able to scale the business. But you still need to acquire customers if you are a high growth company, and then you can't go away about facing the reality that you need to acquire those customers in a efficient, cost efficient way, or with a profitable, efficient motion. So, and I know that both of us believe a lot in content. That's why we are here together. And you have your sessions almost every Tuesday, right? That's the days you use the podcast, the part of the day to record podcasts and content that then are used during the entire month on your own channels. You have been also, I think that I read one of your LinkedIn posts about that you have been one of the first ones to use video, and because the video was hard to replicate in a certain way, and people could know first, could understand how much you know about the topic, and could get already to know you before meeting you, right? Which is kind of a very powerful way. For instance, now it's the first time that we are meeting each other, and I've seen so many videos of you and I've heard so many podcasts. It's kind of, as I already know you for a while now, which makes the conversation much more easy, and almost makes me, as a potential client, almost already convinced to go, okay, Chris, how can you help me solving this problem? Because I know that clearly you have the knowledge to help me solve this, and I've been listening to a lot of podcasts and content, and I think you are the person to support me here. So how did you see? Sorry about the summary, but how do you see the evolution of content marketing, and how do you see? Do you think that content is one of the most effective channels to to produce pipeline and to generate conversations that might generate into opportunities, into proposals, and into deals? How would you allocate the perfect budget from a marketing and go-to-market perspective to acquire new customers?
There was a lot in there, and so
Thank you.
there's been a clear trend that you could notice as early as like 2013 to 2015 in B2B, where B2B buyers no longer just want to take a meeting with a sales rep cold to learn about something, because they've recognized they can learn about it on their own in places that they trust a lot more than your rep. And so people have started as early as that time, and it's just continued to accelerate. Spend most of the time independently researching and buying, passively buying, learning, seeing, learning some information, trusting it, seeing issues inside of their business, talking to their peers, researching it, reading other content, attending a live event, going to podcasts, asking an advisor about it. And they're doing all this stuff that doesn't have anything to do with them interacting with your company in a trackable way. And that core insight would lead you, if you were a strategic, smart CEO and founder, to, we need to put content in places that educate our customer in a way that they want, so that we don't have to spend all this time doing one-to-one meetings with people that don't want to buy. We want to educate people. And then when we're in a sales conversation, they've already prioritized the problem. They've probably allocated budget toward it. They've talked to the peers, the other people that are going to block the deal. They have made a short list of vendors, or decided that you're the vendor they're going to use without even talking to you. And so that was the original strategy for content broadly. And I'll get into that in a second. And then going into LinkedIn, I would just start sharing my expertise in written format. Written was the predominant format on LinkedIn in 2019, and strangely still is today. And people started to be plagiarizing my content directly. Somebody would take my post that I wrote yesterday, copy and paste it. I'd wake up the next morning and 7 people would send it to my inbox saying, here's this person's post. It's the exact same one as you had yesterday, but they've just translated it into German.
Wow.
And so at that point, I decided to move into video, mainly as a defense, not an offense, just so people are really clear. This was not like a place where it's like, oh, video is going to be the way. It was, hey, people are copying my shit. They're not going to be able to copy it when it's my face on it, when it's me communicating this over and over, where people can feel the confidence, the experience, the expertise, the data. And so that was the strategy that I took in August of 2019, and I've continued. I think that I've probably posted the most videos on LinkedIn over the past 4 or 5 years since that time. I have been incredibly committed and consistent to the channel. to address the idea on like content broadly, I think it's really important to break the concept between content, what you say, and distribution, where you put it.
Right.
And so, there's people that think, oh, I got to do content. Let me hire someone in the Philippines for $250 per $5,000 blog post, 5,000 word blog post. And let's just have them pump out 30 blogs. And that's our content strategy. And literally it sits in Google, gets no traction and just sits there. And so we need to be thinking about both content and distribution. And when it comes to content, I just think creating a waterfall and being able to take advantage of offshoring in terms of video editing and AI in terms of like automation, timestamping, transcripts,
Hmm.
summaries, to be able to take a small amount of your time as an expert that you invest to create video and then have this machine in the background that's taking it and making it a YouTube video, putting it on a podcast, writing the show notes, making YouTube shorts that are optimized for search, giving you content that you can post on LinkedIn, creating a web page on your website that has the summary, writing blogs on the five questions or topics you were asked based on what you said. And you literally have a content machine by spending 1 hour a week on a podcast. And I think that as a founder of a company, to be able to recognize that if you got to get the product right, you got to get the market right, you got to get the time. Your strategy has to be in place. This
Right.
strategy will not fix a broken strategy, but if your strategy is right and you put this on top of it and you get it right, this will be the biggest driver to your business growth that's possible for the next 5 years. And it has been for the past 5. And the people that are sitting there outsourcing it to their marketing manager, hoping that the marketing manager will figure it out at their startup, you're missing the boat. You need to figure this out for yourself. And so I think this is a core skill that a founder CEO needs today. And then the secondary benefit is you get all of this
Hmm.
feedback back from the market. Questions, you put content out, you get thoughts about it, you get objections, you get follow-up questions, you get DMs, you get
Right.
conversations. And that feedback loop from the market helps you iterate on the product, iterate on the message, iterate on the sales pitch. And I just think that especially from 0 to 10, when you're really trying to lock in traction, I think having this engine just becomes the most powerful thing you can have as a CEO that sees the whole thing, the product, the strategy, the messaging, the go-to-market strategy, the investments. If that's you, then I think this just becomes a huge advantage.
I think that that's really a great point, and I think that's one of the things that CEOs struggle with is that they delegate the content for someone to write, and then they don't see their voice there and their expertise there, and it doesn't work, right? So that's why just the strategy or the framework that you describe it is so effective to help create that confidence and to produce and publish content that the CEO and the founder are happy to see online and that represents the founder and CEO's thoughts, and then having the team support that message to get out, right? Instead of having the team think for the CEO what we should be talking about, right?
Yeah, I think owning the message to the market as a founder, I think is a really important thing. Can you be successful without it? Sure. But are you missing a large opportunity by not doing it? I think it's definitively yes.
Yeah. Especially in a moment that you have so much content online, there is so much noise. Uh, then I believe that if your content is kind of average, even if it is consistent, it will not stand out in the crowd. So people will not associate with you with a category that they want to know more. And of course, as you said, you can have an amazing content strategy if you don't have an amazing go-to-market strategy. At the end of the day, if you are not solving a problem that people are looking for a solution and willing to pay for that solution, then there is no market, there is no business. So we should not be even optimizing this because there is no business, right? So that's a very good point. The fundamentals: problem, solution fit, product market fit, go to market fit, and then we are finally ready to scale in for the first stage, right? Awesome. I think on the other side is, I think that one of the most difficult times, just thinking from the angle of the CEO, and you can also take your art, seeing other B2B companies scaling, but also scaling your own services companies at Refine Labs, is, having the revenue seats or the go-to-market seats right is a really hard mission for the stage of growth of the company, right? So having the right CMO, having the right VP customer success, having the right VP sales, and having the right VP product, and having all them working together to scale the company, which is in another story.
Hmm.
What would be your thoughts about this being a very important equation of scaling a company from one stage to the next stage? And we are talking mainly 10 to 100 million in revenue. And if you want to go deeper, for instance, into the position of the CMO or of the CRO, I'm more than happy to get your insights about what CEOs should be looking for when they hire their go-to-market teams.
Yeah, I was on a call with a CFO a couple of weeks ago, um, and he was like, I think we need a new strategy in marketing. I think we need to, make a seat change in the marketing department." And I said back to him, there are two ways to make a strategy change in your marketing department or in any department. You can change the leader, or you can
Mhm.
hire an external firm that injects a new strategy for your leader. And I think that every executive only thinks about option number one, that it's the person that is the issue. And I think that over time, people will start to realize that a hybrid talent model inside of a B2B company is the appropriate way to run most of your functions. Where hybrid, meaning you have a blend of external talent that brings architecture, frameworks, benchmarks, experience, best practices, data, um, confidence in decision making, validates decisions, weighs in on strategy. You have that side. And then you have the internal team that brings company strategy, customer understanding, market understanding, cross functional work between teams, executional skills to get the work done, and bringing those two things together. The challenge of being so reliant in a company on the leader of a function is that just by design, like, it's not a bad thing, it's just the reality. When you are an in-house CMO or any person that is in-house, the only experience that you have in detail is what's happening at the company I currently work for and what did I do at the companies that I worked for before. And you do not have a good view on the reality of the market. You don't have a good view on how you perform relative to other companies. You don't have a view on what your metrics should look like relative to what other ones do. You haven't tried something 10 times to realize these are the 7 things that don't work and these are the 3 things that do. Um, and so for that core reason, I think that over time companies will need to blend talent for that reason, because we just cannot expect an in-house employee to bring those intangibles that you can't get while you work in-house. And so when it comes to leadership, I think that if you are the leader of a function, think the chief revenue officer of a company that's doing $100 million. That means you're probably spending 20-30 million dollars a year just on your sales team as a chief revenue officer. To hire a firm for 100 grand a year, which is 1% of your budget, less than one, a half a percent of the total budget, that can help you make decisions around that whole 20-30 million, is an incredible strategy instead of just trying to do it all by yourself. And I think that you could play that in product, you could play that in CSAM, you could play that. I mean, sales teams have been trying to do it for years. Sales teams out of the $20 million budget will spend $1 million on sales training. They'll hire Challenger or Medic or someone else to come in and deliver sales training to try
Yes.
and make their sales team better using a architecture and a framework and a process. And I think that we need to be thinking about that in operations for sure. We need to be thinking about that in marketing and CS and AM and other places outside of just the traditional sales. And I don't think that it's a sales trainer. I think that that sales trainers were popular in the 80s when it was really about sales skill, but I think that there is a more robust firm that uses data to help companies make decisions. And I think that is the actual solution, not trying to, you're going to swing and miss on hires for a variety of reasons. And in a crazy way, I've started to come to the conclusion that it is usually not due to lack of talent or capability of the individual. I think that oftentimes the machine that they get put into sets them up to fail. The metrics that are in there set them up to fail. The strategy or the timelines or the expectations are not realistic relative to the performance or any other element that has less to do with the capability of one single person. So maybe a different take than make sure that you ask these 7 questions when you hire your CMO. Like, sure, I could give you that advice, but the reality is that if you do not understand the function better than the person that you are hiring, you are not going to be able to judge their performance better than they are. You're not going to know, and we can't expect that a founder or CEO is going to become a deep subject matter expert in every single area, but you need to be educated enough to understand whether the person can do the job or not.
Yeah. And the expectations, right? What you just said, which is I will kind of hire the god of marketing or the god of sales or the god of customer success, and they will come up with all the solutions, and they will not need any. They will not need the help of a team, neither the outside help to understand the difference between the trees and the forest, and we know that sometimes when we are looking from the outside, we see things much better than when we are inside, right? So and also as executive, as human beings, as teams, we have ups and downs, and it takes some time to really build a high performing team, as you said. Then usually results are demanded immediately because the CEO is just thinking, oh, I need to go to my board and I need to go to my investors to present the results, and this is being super well paid, right? And so I'm not getting well in the picture. So we know it's not an easy spot to be in each of the seats, but anyway, that's a good reflection, especially on being able to tap on agencies and outside advisors who are able to see multiple companies to be able to support them. In terms of, you talked kind of 2 things. I will not go too deep in marketing, given our audience and go to market. But in terms of what do you think are really the important metrics that a CEO should be looking for, and more than a CEO, an executive team. That's the way I think. I think that the CEO is just another member of the executive team, and those are the great CEOs. And then they just step up when a certain decision is needed to be taken that the executive team is not able to get in a consensual way. So what are the metrics that you think are the most important to track in terms of go-to-market performance?
As a C-level executive team, you should be able to diagnose issues in your go-to-market without ever talking about attribution, ever. And so when you think about what are the things that we need to actually diagnose these issues, we need our growth rate. We need our sales and marketing percentages of net new ARR, including CS and AM and NRR. Then we need our total ARR. We need net new logo. We need expansion. We need churn. We need CAC. We need LTV. Then you break it down even further and you can say, this is how much we spent to create pipeline. This is how much we're spending to close pipeline on sales headcount and things like that. Here's the things that we're spending to expand customers. Here are the performance of those 3 buckets. And then here are the unit economics across those 3 spectrums. And very quickly identify out of all of those core metrics, what is the actual issue, and nail it down to one or multiple parts of a core go-to-market engine. Before you ever think about, did that deal get sourced by SDRs or content or website or the games that people play when they look at it from the bottom, the lowest level, and try to layer it up, which doesn't work. And then once you identify there, then you can go in and look at all those things with some context. And then lastly, if you had benchmarks around all the companies that are like you, that are growing at a similar rate, that are in a similar revenue size, that are in a similar market potentially, and you could see how you stacked up in when I tell I was consulting with a CEO and a CFO yesterday, and I said, in this specific metric, you are in the bottom 10th percentile of all of the companies that we've looked at, the bottom 10th percentile. And there's no other way to get a point across than to be able to, based on data, deliver that metric to a CEO and a CFO and the rest of the executive team. It gets everyone to line very quickly on where we're overperforming, underperforming, or on track. And then with that, you have such a different level of context when you start looking at attribution data and you start looking at how the investments are allocated. And so I think those are the core metric stack that companies need. And then beneath that, they need to be able, in order to calculate unit economics, you need to have a data layer in your CRM that allows you to be able to do that. And most companies just don't have a lot of granularity. Like, they start on opportunity created. The pre-sales process is very disconnected from the rest of the data. So they don't understand that part of the process, which is, by the way, incredibly inefficient and incredibly expensive. And part of the main reason that companies aren't hitting quota from a sales perspective is actually the pre-sales process. And so being able to look at all that and then make an informed decision about why certain initiatives are actually the top strategic initiatives based on top level financial and business data.
Got it. Very good points. Chris, I know time is flying as usual when we are having a good time. So let's quickly go to the last segment of the show where we kind of have a quick question and answer pace that we always do with all our guests on the show. So number one, if you'd have an opportunity to have a coffee with Chris at the beginning of Refine Labs, what advice would you offer to Chris at that time?
That you need to, when you're starting a company, you need to decide whether you're building it to cash flow or whether you're building it to exit. And I would tell Chris to be a lot more intentional about the purpose of why you're building the business.
Awesome. I almost deserved the follow-up, but I will control my my curiosity. And your proudest achievement in your career journey so far?
Just, I think, continuing to try to reach my potential, continuing to level up in the conversations that I'm having that used to be with a marketing manager and then became with a CMO and now has become with CEOs and CFOs of billion-dollar organizations. And very large companies. It's some of the most esteemed, accomplished companies with great investors and great financial profiles. And I feel honored to be able to weigh in and work with people of such a high caliber.
Absolutely. The worst advice you have ever received? Chris, don't start Refine Labs.
I don't really have an answer to that one. I don't know.
Yeah, got it. Makes sense. This one is very controversial. We already have any kind of response to this one. It's almost a test. And now the resources. Your favorite book, it can be business or non-business. You decide. It's just to get to know more about yourself.
Mastery by Robert Greene. I think for people that are trying to truly master a craft, understanding that what the process looks like and being able to see that in people that have done incredible things, that the path to mastering a craft is not a straight line.
Awesome. Your favorite movie or series, whatever you prefer to watch?
I don't watch a ton of TV, so if I am going to watch TV, it's NFL football game.
Okay, sounds fair. And finally, your favorite podcasts, excluding this one and Revenue Vitals. B2B.
I guess at the very moment, I'm spending some time listening to the All In podcast.
Right.
It's not exactly B2B, but they do, produce news on that type of space. So I guess that would be the one where I'm getting some insights from right now. I think that the altitude that those people are seeing things from and what they've accomplished is something that there's a lot to learn from.
Awesome. And before we go, is there any final message that you'd like to share with the audience? Any question that I should have asked that I didn't ask that you really would like to convey a point about?
If you all like this, the content on this episode, I do a live event every Tuesday at noon Central. You can sign up for it on the Pesetto website, pesetto.com, where we basically talk about all of these things live. You can bring your questions, your own situation. You can meet other peers that are interested in these things. So if you're interested in joining that, it's every Tuesday, 12 p.m. Central.
Awesome. Chris, thanks so much for making the time. Congrats for your journey so far. I'm excited to keep following, and you are always welcome to come back to the show.
Thanks for everything, Mike. Appreciate being here.
And to our community, thanks for being there. We keep bringing you the best of the best to help you scale your business as quickly as possible with less trauma as possible. Talk to you soon and keep scaling.